Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, October the 17th. The year is 2022. Let's talk trading. Seeing versus looking for. These videos are for educational purposes only. Your results may differ from mine. What am I talking about? Seeing versus looking for. Well, it's kind of simple because when you're trading, a lot of times you're looking for something and you're looking for a signal. So, for example, if we take a look at the pound right now, the British pound US dollar pair, and we pull up our chart here, you can see price has been going up. We've got, over 200 pips in range, and it's in the upper rat zone. So we're probably, you might be looking for price to come back down. But, price has been in the upper rat zone ever since it was at 1330, if I remember correctly. So yeah, you see here at 1330, price is in the upper rat zone. So it's been in the upper rat zone this whole time because it kept making new highs. So if you're looking to go short because of it being in the upper rat zone, what you might not have seen, what you didn't see, was that price is going up, and probably on H4, we've got 4 H4s in a row. It's on a freight train, and if you started to go short, you may have taken a beating. You might have gotten a few pips here or here, but if you thought it was going to break down, you were mistaken. And not only that, if you look here at the M30, you can see there was only a couple of times where you had 2 or more reds in a row. And then if you go switch up the H1 chart, you can see 2 in a row only happened once so far today. And you could see, you could say, here's a return bar. So you could be looking for all the reasons why price, quote unquote, has to come back down. But you might not see what price is actually doing. So trying to find the shorts right here, as opposed to saying, hey, it broke out of yesterday's or Friday's high. Maybe this is going to go on a tear, which it did. So that's a big difference between seeing and looking for. Seeing what price is doing rather than looking for your signal. Because maybe if you see what price is doing, then maybe you'll look for the signal that goes along with what price is doing. So, for example, I mentioned on Friday about the launch pad, if I remember correctly, or it might have been Thursday. I can't remember which day it was. But, earlier, price was down here around the 1240. And you could see here how it launched through it. Now, this first couple of times it got pushed back, but it finally broke through. And then if you come up here to 1340, you can see it hit the launch pad and it finally rocketed. But then it hit 1440 and it pulled back and didn't quite launch again. Well, we've already had 32 pips of range. So if you almost on all charts, it's saying, yeah, this thing's overheated. If you're using RSI or some other squiggly line indicator, it's like, yep, this thing's overheated. But you need to see what's actually going on. And I know it probably sounds like common sense, but what happens is when you're looking for those trades, you can start to get tunnel vision. And sometimes what you just need to do is literally move back away from the screen. I mean, maybe you're normally, a foot away, or I don't know how close you put your head up to the screen, because I know sometimes I'm up like a foot depending if I've got my contacts in or not. But maybe if you just sit back, lean back in your chair, put your hands behind your head, and if your chair rocks, just sit back and rock and just look at the chart. But don't look for anything, just look at it and let your brain tell you what it sees. And then, because if you're not looking for something in particular, you might see something that you wouldn't have seen before. So right here, we got the Walmart lines going short at 30, be worth about 5 pips right now 7. But, you're taking a look at this and you're saying, okay, price is going down. Wow, that 30 trade would have really paid off. You can see price going down. Then it stopped it right around the 20. Actually hit 17 and it's bounced. But by not looking for it, you can see it. It's like, oh, okay. And, a lot of times, say, we might be looking at the, see, where is that chart? Yeah, here we go. Look at the time frames. Let's look at a 1 minute chart. So we had a higher low here, and you can see price tested it and then fell down through it. But you can also see here all these times where there was just maybe a pip to be had, and then maybe it reversed on you almost 20 pips because, once again, you were looking for something. And in this case, it might have been that higher low trade. But you could see how prices just continually has been going up. And usually for it to reverse, it'll do a breakout, it'll consolidate, and then it'll either come out of that high like it did and then come back down. And this really wasn't a big move here on the 1 minute, but this could have been the blow off top when you look at it back here on the H1. That could have been that blow off top. And who knows, maybe it might even come back down and test the previous session's high there, Friday's high. But that's just something for you to observe in yourself when you're sitting down, and maybe every hour or so you just catch yourself, okay, am I looking for something or am I seeing it? Because it's really easy to get pulled into the chart and pulled into your method, and you're just looking for something versus seeing what the market's doing. You're looking for that signal, and that signal's telling you to go short, and then it goes boom on you, and then you get mad at the method. Because most methods, if you think about it, don't have a do not trade factor built in or listed. So for example, if you're on a reversal type trading method like the rat zone, we have the okay, here's the rat zone. In fact, let's just go to the rat zone chart. Where is it? Right here. And we have the rat zone, we have the rat reversal type of trade, and right now we actually got a signal here at 1424 to go short, or another one at 1419, and they both would have paid off. But the thing is, that's what's built into the system. It's like we know the zone, and then we know the trade. And does a trade work each time? Well, in fact, right here, it didn't quite break out. Here, it barely broke. But is there something that says, hey, really be cautious? So if it breaks above the previous day's high, then it's like, oh, we need to be cautious and wait. and for something else to say, okay, maybe now it's time to trade. So for example, it was in the rat zone, but it was in the rat zone here and here and here, but it wasn't in the ATR zone. So we said, if this thing's on a tear and it's, above the normal ATR, then maybe we need to see if it gets to the ATR zone and then look for a trade. And right here, we had a whole low, highest open at 1431. It tried to test that new high and then it dropped down. So for the holo traders out there on the H1, there was your signal. And also for the 1, 2, 3 traders, there was your signal 2. For, let me think, what other, we got the rats trading that. We've got, the ATR zone, the wick zone traders. Once again, price broke above the previous high right here. So the wick zone traders were heading in that direction. So when you're in the upper wick zone and you're in the rat zone, well, you've got a signal that would tell you to go long and a signal that would tell you to go short. So after it breaks through the upper wick zone here, that's when you start to say, okay, I really want to go short, but I better wait for the next zone, which would have been the ATR zone, before I actually start to put on that short. So right now, holo traders be up 20 pips. And you can see we didn't quite get to that launch pad at 1440. We got to 1439, so we missed it by a pip. And that goes to show how you have to be patient. You have to let price get there. Sometimes you might anticipate, oh, I can get in a pip early, and then that pip early would have cost you whatever your risk is, your stop loss. So that's just something that, and I may have discussed this years ago. I don't remember. I put out, I think, over 1,000, might even be close to 2,000 trading videos. So I'm sure from years to years there's some repetition, but then again, good trading is repetitious. So especially for the traders that are new to the channel, they may not have seen those videos. So, and for those who have been watching them all, well, once again, repetition is helpful, because sometimes you need to hear something more than once, because either you forgot, or maybe you didn't get it the first time, or maybe you need a reminder, a refresher. Because you can see here on the dashboard, there's a lot of holo and H1 trades to be had this hour, and you can see how price is spiking on some of these other pairs. So you could be looking for some reversals on them too. See, right now we moved 36 pips off of that high. So the red rats are actually feasting right here. And if you noticed here on the M5, there was a couple of times where we had 2 or more in a row. So now we're in one of those times, because we had 1, 2, 3, 4, 5, 6, 7 green M5s in a row. So hopefully you'll take the time and check yourself out, and let us know what you look for in trading, and whether or not you take the time to actually push back away from the screen and just look at the screen and see what you see, as opposed to looking for something. And as I say, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.